Hi, this is Ryan Fisher here with Cama Plan. Today, I want to thank you guys for joining us. We have Tom Dunkel, who's going to give us some information about due diligence with self-storage investing. Just a quick disclosure, Cama Plan does not endorse or give any tax, legal, or investment advice. Consult with your accountants, attorneys, and other professionals before making any investments. This is my contact information for anybody who has any questions about using a self-directed IRA or 401k. R Fisher, Fisher's with a C there, RFISCHER at camaplan.com. And our toll-free number, 866-559-4430. I want to introduce Tom. This is a little bit about Tom. He's been working in corporate finance for over 25 years in real estate and investment experience. He's going to take it from here, but I think we may have lost him. I know he's traveling at the moment. He should be able to pop back in any moment. In the meantime, I'm going to go over and switch to his presentation. And let's wait for Tom to join back in, guys. Sorry about that. There we are. Tom's coming back in now. You got volume there, Tom?
I do. Can you hear me?
Yes. Oops.
Okay.
Hold on. Just click the wrong thing. Stop share. Why is that? Okay. Tom, you can go ahead and tell us a little bit about yourself while I figure this out.
Yeah, sure. So I'm Tom Dunkel. I'm managing direct chief investment officer at Belrose Stewart Group, and we acquire self-storage facilities in the eastern U.S. Our current portfolio is about 250,000 square feet. We're spread across Maryland, Virginia, and North Carolina, Georgia, and Florida. And we're always looking for additional facilities to add to our portfolio. We are value add buyers, which means that we're looking for facilities that aren't being run correctly. And so we can come in with our sophisticated business processes and we can increase the value of those facilities. But I've been a Cama Plan client since I think 2009, Ryan.
Yes.
So big fans of. Ryan.
Tom, can you turn up your volume? You're a little low.
Okay.
You can just let me know when to move to your next slide. I guess I can do that now.
Okay. Yeah. So as I just mentioned, I've been a Cama Plan client, and I've been a high net worth accredited investor since 2006. So along the way, I've learned some lessons about due diligence and good deals and bad deals. And unfortunately, some of those lessons came because I lost money or got in the wrong situation. So what I want to talk to you about today is the S.A.F.E method, which is the method that I've developed over the years to evaluate different alternative investment opportunities. So we call it the S.A.F.E method, and I'll get into that acronym in a minute. But of course, I have to put a disclaimer out there that this is just a framework for analyzing investment opportunities. It obviously does not guarantee results. We're going to be going through a list of questions that you should be asking when you're looking at an alternative investment, and obviously this list is not exhaustive. Every situation is going to be different. So you need to do your own due diligence and consult with your own advisors, attorneys, accountants, etc. I am not an attorney. I'm not an accountant, but I am an experienced investor. And the views here today are strictly my own and Belrose Storage Group's, and not Cama Plans.
Tom, I do just want to let everybody in the audience know that they can ask any questions in the chat box or the Q&A chat, and we'll answer anything you guys have for us today. Thanks for being with us, though, Tom.
Yeah, Ryan, it's great to be here. It's been a little while, but I'm happy to be back presenting. So you can go to the next slide. So I guess you jumped past one there, but yeah, Warren Buffett, of course, is the Oracle of Omaha, very famous investor. He says that risk comes from not knowing what you're doing. So that's a very, stark statement, but it actually, you'd be surprised how many people invest in things they don't really understand. And so they lose money, and then they wonder why. Take a look at the cryptocurrency markets the last several months. But when you're looking at an alternative investment opportunity, I know that can be difficult because there's no, it's not a public market. It might be a private offering, and every offering might be a little bit different. So you need a framework to perform your due diligence and get that knowledge that you need to be a successful investor. So next slide, please. So if you're a Cama Plan client, or you're watching this video, you're probably already interested in alternative investing. So I'll not get up on my soapbox too much here, but the public markets out there are volatile, and they're dominated by massive investors, and they make the rules. And so it can be a little bit unruly out there. Obviously today, inflation is running rampant, which is destroying savers, interest rates, and we'll touch on this in a minute, but interest rates on CDs and money markets are ridiculously low, and you're losing money if you're in those kind of vehicles. So the key is to invest in things that you know and you understand, and that can help you as an individual investor achieve your wealth building goals, and at the same time sleep well at night, because you don't want to be in an investment that's keeping you up at night because you don't understand it, or you're not really sure what you've gotten yourself into. So again, as a high net worth investor since 2006, accredited investor, I've learned the hard way how to evaluate and de-risk alternative investments. Next slide. So there's tons of different types of alternative investments out there. There's mortgage notes, there's self-storage, there's multifamily, there's gold, there's lending, there's all these different things out there. But if a deal comes across your desk, an opportunity is presented to you, and you don't know how to process it, you're gonna feel lost and confused and perplexed. And unfortunately, what that's going to do is it's going to make you stay where you're at right now, which might be in stocks, bonds, mutual funds, which aren't getting you to your wealth building goals. Next one, Ryan. So like I mentioned earlier, look at this. Philadelphia Inquirer, June 19th, 2011. This is 11 years ago we've been in this low interest rate environment. They're saying that this 1.25% money market is out of this world. Are you kidding me? Anyway, so you've got to look at alternative investments, because otherwise this is what your parked cash is going to look like. Parked cash is trash. You can't sit on parked cash. You've got to put it to work. So you need a method to go about doing this. So what are your investing goals? Most people have a combination of one or two or all three of these things in mind when they're making an investment decision. If you're a little more mature, a little older, a little further down your life path, You might be looking more at security and capital preservation. And but if you might be looking for income because maybe you've retired or you're looking to retire, you need that passive income. If you're younger and you're willing to take risk and have a longer time horizon, maybe you're looking at growth. So you're looking at the high flying stocks and maybe some of these alternative technologies, and willing to, weather that risk and that time. But there's always some combination of these three things. So how do you decide if that investment is gonna work for you? Well, you need to do due diligence. So there's lots of different alternative investment out there. At Belrose Storage Group, we do private offerings of ownership interests in the LLC that owns the self-storage facility. So that would be an example of direct investing, where it's a single property, it's a single investment, as compared to a fund where maybe an opportunity, a specific opportunity hasn't been identified yet, but there's a sponsor out there that's raising a pool of capital so that when they do find an investment that fits the fund criteria, they're going to go ahead and buy that. But again, we're direct investors, which I personally like better. And when I invest in other people's deals, I like investing in direct deals better as well, because it's just a tough step for me to go into a fund environment where it's not clear what the asset ultimately is. But of course, real estate is an alternative investment, and a great one. I've done a lot of lending through my CAMA account, which is another great secured way to lend and make better money than CDs and most mutual funds. Unsecured is another way to do lending. I don't really recommend that because I personally like to be attached to something when I lend. I've done precious metals in my CAMA account, and really alternative investments or anything outside of the publicly traded stocks, bonds, and mutual funds.
And when you're doing your private lending, Tom, you're doing that secured to real estate, as in, a house or apartment building or, storage unit, et cetera.
That's correct.
Okay.
Yeah. So you've got all these alternatives to look at, but how do you analyze these? How do you make a good educated decision? Well, you need to do your due diligence, and due diligence is just a fancy term for asking a lot of questions. So we want to ask questions, and when we get the answers, if we're not comfortable with those answers, if they don't pass the smell test, if something doesn't seem right, if it makes you uncomfortable or unsure, you stop. And if you ask for more questions and it still doesn't feel right, then you stop and you find another opportunity. There's a lot of opportunities out there. There's self-storage, there's multifamily, there's single family, there's all kinds of great alternative investments out there. So don't feel like you can't walk away from one, because that's an important thing that I wish I had done in a few instances. But again, you want to match up your investing goals with the investment. So for self-storage investing, I think it matches up well with a lot of investors' criteria because it offers the security of real estate. There's income that comes from the cash flow from the business, and it's growth oriented because of the asset appreciates over time. So the method that we developed over the years from our experience is called the S.A.F.E method. I'm going to go to the next slide, Ryan.
Yeah, I was just going to comment there, Tom.
Yeah.
I think that's important that you're telling people, to stop if they're unsure about that, because there's a lot of opportunities out there that you don't have to just jump in something to, get it working yet.
Yep. Yeah. And you don't want to just jump into something because your friend or your relative jumped into it. You want to, take that as a lead and check it out for yourself. So the framework that we developed over the years is called the S.A.F.E method. S.A.F.E is an acronym because, of course, every investment has risk associated with it. So I'm not saying these are safe investments. It's just a clever acronym. So S stands for sponsor. A stands for asset. F stands for financials, and E stands for exit. So next slide. So S is a sponsor. So who's the sponsor? Well, this is the person that's coming to you with the opportunity. They're the sponsor. They might be called the general partner or a partner. They might be called the promoter. There's different words for it, but we call it a sponsor. And so this is the person that you're really entrusting your money with. So I won't go through all of these questions. And by the way, this presentation is available for free on our website. I encourage people to go there and download it. You don't need to give your name, your phone number, your email, nothing. It's just there on our homepage because it's just a way for us to give back to the investor community. But it's at belrosestoragegroup.com, BELROSE, just one L, belrosestoragegroup.com. You can download this, and I encourage you to do so. But the sponsor is who you're entrusting your money with. Have you invested with them before? Do you know anyone who has? What is their experience in this particular space? What is their background? What's their track record? I'll tell you a story, quick story that would have saved me $50,000. This is true. If I had just Googled the name of the sponsor of this fund that I put money into, I would have seen that he had a sketchy background and had some lawsuits against him and that sort of thing. And I'm sure had I done that, I would have opted to not invest, but I didn't do that. I did invest and I lost $50,000. So you want to make sure that the sponsor that's running your deal is a credible person. And you want to have a conversation with them and just get to know them. So the ultimate question at the bottom here is, can you sleep well at night knowing that the sponsor has your hard-earned money? A is for asset. This one surprises me. It surprises me a lot how many investors I run into talk about things and they don't really understand the asset that they're investing in. So, for example, with Belrose Storage Group, if you invest in one of our equity syndications, you're going to be a membership interest holder in an LLC that owns a self-storage facility. So that's pretty straightforward. It's about as straightforward as you can get, I think, in terms of structure. But I want to know, like, crypto investors, like, what do they think the asset is that they're investing in? Can they explain it to their mother-in-law or to their kid? So you want to ask a lot of questions about the asset, so you know that what it is that you're actually investing in. And importantly, does this asset align with your goal of security, income, or growth? If you're looking for income, well, you probably shouldn't buy gold because gold has no cash flow associated with it, at least the way that I know how to invest in gold. And similarly with these digital assets that are out there, if you don't fully understand them, you might want to take a step back and wait for that market to mature a little bit so that you can gain an understanding of what you're investing in. But you want to know, what are the risks associated with this asset? Like if it's a self-storage facility or a multifamily building, is it in a good market? Is that market growing? Is it overbuilt? Are there too many apartments in that market? And that's going to put downward pressure on rents. Those are some things that you can spend a few minutes on the internet and get some good demographic information about how that market is growing or not growing. Is the economy in that where the asset is it diverse, or is it like a one factory town? And if that factory goes out of business, the town goes out of business and your multifamily investment goes down the drain. You want to be on top of those things. So ultimate question, once again, is, can you sleep well at night knowing that your hard-earned money is tied up in this asset? F is for financials. So this is where you want to look at the financial projections that are provided by the sponsor related to the asset. And a good question to ask your sponsor would be, have you performed this way in the past? Because a lot of projections that I've seen over the years are pretty rosy. They expect revenues to increase dramatically, expenses to go down dramatically, and the world is going to be perfect. Well, we all know that's not how the way the world works. So you want to make sure that their projections are attainable and that they've performed this way in the past. You also want to know for you personally, how much money are you putting into this investment, and what percentage of your net worth or your liquid cash does that represent, and are you okay with that? Because you don't want to put too many eggs in one basket. And then you want to also understand the tax implications for this investment. So I talked about lending earlier, and as much as I do love lending, it's not great for taxes because interest income is fully taxable at ordinary income rates. So that's the downside to lending. Self-storage facility investing, you get the benefit of depreciation, and there are ways to make the depreciation even higher, which is a pass-through to the investors. So there could be a scenario where you get positive cash distributions over the year, but your taxable income is actually negative, which is a beautiful thing associated with most kinds of commercial real estate. And again, the ultimate question is, can you sleep well at night with a solid understanding of the financial elements of this investment opportunity? And finally, E is for exit. So how do you get out of this thing? Once you've made your decision, you've done your homework, you decide to get into it, how do you get out? It's not like you can go to schwab.com and click, sell your position in a Belrose Storage Group deal, and get your money right out of it. You have to understand, how do you get paid back? When do you get paid back? How does this come about? Does a property need to be sold? And if so, what are the assumptions about what the property is going to sell for? Or if you're going to be repaid out of a refinance or some kind of recapitalization of the asset, you need to understand how that works. As we know right now, interest rates are increasing. Lending is becoming tighter. So if you're going into a deal and the sponsor is telling you that they're going to refinance in 2 or 3 years, you might want to ask some questions about that, because cash out refinancing in commercial real estate is getting tough right now. And if you can do it, the terms are not as great as they once were. So you want to ask a lot of questions about that. But ultimately, you just want to know that you are okay and you can sleep at night understanding that your money is tied up in this investment for a period of time, and you just need to understand that and be okay with it.
So, Tom, would you recommend that investors know the exit strategy before they even get into an investment?
Oh, 100%. Yeah, in an alternative investment, an apartment building or a self-storage facility or a fix and flip deal, yeah, you want to absolutely know what the exit strategy is going in. So let's put the S.A.F.E method to work here. So this is a case study of a Belrose Storage Group deal that we just closed a couple of months ago. We bought Pilgrim Mill Storage in Cumming, Georgia. So let's just quickly run it through the filter here. So the sponsor is Belrose Storage Group. We have a fantastic team. We have a very experienced sponsorship group, and we have a solid track record of delivering returns to our investors above our projections. So, of course, I'm biased, but I think Belrose Storage Group gets a check mark for the sponsor, but you want to ask those questions and spend time. I love when our investors call and we have a good conversation on the phone, get to know each other. How are things going? I want to understand what their investment strategy is, what's their criteria, because maybe we're a fit, maybe we're not. Because we don't work with everybody, but there's people that we like to work with. We just want to make sure our interests are well aligned. So, whoever the sponsor is, you want to spend time talking with them for sure. The asset, so this was Pilgrim Mill Storage. You can see a picture of it there on the side. So our investors purchased membership interests in the LLC that owns this property. It's 212 self-storage units, a little over 31,000 square feet down in Cumming, Georgia. So if you were to Google Cumming, Georgia, or go to city-data.net and type in Cumming, Georgia, what you'll find is that this is a growing market. It's a pretty affluent market. It's actually right near a vacation community near a lake. And so a lot of the storage customers are, storing their second home, goodies in there, their kayaks and bikes and things like that. And one of the things we loved about this facility, and again, this is something that you can check online, is the rental rates for the units were substantially below the market. So if you Googled self-storage in Cumming, Georgia, you could go and look at the facilities in this market and you could see what they're charging, because most of them post online what they're charging. And you would then ask the sponsor, hey, what is this facility charging for the same size unit? And you would see that there's that difference there. And that's one of the things that we look for when we acquire a self-storage facility. Moving on to financials. So this is where I'm quite proud of our company. We do a very conservative underwriting when we look at these facilities. In the facilities that we've purchased and then since sold, we've outperformed our projections in each case. And across our portfolio right now, we're executing above our plan. So I'm really proud about that, because as an investor myself, I like to see that the projections are reasonable, realistic. There's a good story about how those projections are going to come about, and that story makes sense. It's not some crazy, wild story where all these different things have to line up perfectly for this to happen. Our basic business model in storage is very much blocking and tackling. We raise rates, we manage expenses, we eliminate delinquencies, and we just keep the property looking nice. And that simple formula has paid nice dividends for us and our investors. And we do not have hockey sticks in our projections either. We like to under-promise and over-deliver. And finally, exit. So we just acquired this facility, but our exit plan is to reposition it, increase the rates, bring them up to the market rates, manage the expenses, and keep it looking nice. You can see from the picture, it's actually a pretty nice looking facility already. And then we're going to sell it in about 3 years. And quite simply, when we sell the facility, our investors get their money back then. So it's fairly clear, very straightforward kind of exit strategy there. So a little bit about our team. Super excited about our team. We've collected a great group of people with great experience and great core values. That's, I think, why we work so well together, is at a values level. We all have the same kind of core values in terms of teamwork and being principled and just doing what it takes to get things done. So I'm super proud of our team. So Joe Downs and I, we've been business partners for 12 years. We've done distressed mortgage debt. We've done fix and flipping. We've done lending. But our 80 or 90% of our time right now is spent on self-storage, and we just really are enjoying this industry. We've been at it a few years now, so we're getting we're really excited about our growth prospects there. I'm a former corporate finance guy. I was in corporate America for a while in 2006, doing corporate finance and mergers and acquisitions and aerospace and technology, software, IT services. And if you call me up, I'll tell you which astronaut I had lunch with. Next slide. Actually, I actually had lunch with 2 astronauts, so I'll tell you the 2 astronauts that I had lunch with if you call me. Belrose Storage Group, Tim Kane. We're actually here. You'll see I'm in a hotel room here. We're in Louisville, Kentucky at our quarterly self-storage mastermind gathering. So I'm here with Tim Kane as well. He brings a lot of positive energy and experience to the table. He's very experienced real estate investor, project manager. So he helps to run our expansion and operations at the storage facilities. And that's about it. Hope we didn't go too long, but would love to have you download this presentation for free at belrosestorategroup.com. Feel free to call me or email me. I'd love to talk to you more about due diligence, deals that you're looking at and considering. And also, of course, we're big fans of storage. So I'd love to talk to you about self-storage as well. Are there any questions out there?
Tom, what's one or two of your favorite questions or most significant?
Well, inflation is on the tip of everyone's tongue these days, Ryan. So inflation, it's kind of a double-edged sword for us in storage because on the borrowing side, because we do borrow to acquire our facilities, our rates are definitely going up. A year or so ago, we were acquiring facilities with 3.5%, maybe 4% interest. Now we're up closer to the high 4s or low 5s. And so that certainly has an impact on our business because more of the cash flow that's being generated by the business is going to service that debt. But on the flip side, inflation is actually helping us to increase our rental rates. So our top line revenue is outpacing inflation. So inflation's, well, depending on who you ask, is 8 or 9%. Our revenue is across the portfolio is up 20% over the last year. So we're outpacing inflation significantly. So we'll just have to see how things play out, Ryan. But again, because we are very selective about the facilities that we buy, and there has to be a lot of value add there, a lot of cash flow potential. This bump in interest rates is really not having a huge impact on our business, knock on wood. And because we do focus on operations and the things that we can control, because we have obviously no control whatsoever over interest rates and inflation, but we are focused on operating our facilities in an optimal way so that we can service our debt and generate returns for our investors.
Great. Thanks, Tom. Another question. What is your projection on storage market in the next 6 to 12 months?
Yeah, great question. Storage is it's an extremely resilient asset class, and I think that storage is becoming more and more, well, it's not just me thinking it. There's data out in the world to prove it. Self-storage is becoming more and more adopted by the American consumer. So several years back, only 6 or 7% of people were using self-storage. Now it's up to 10%. And that number is going to keep increasing as storage becomes more and more of a mainstream asset class. and more of a mainstream way for people to manage their stuff. So millennials, for example, is the largest group of people out in our world right now. They are using self-storage as part of their overall living strategy. So they have their house or their apartment, and they don't want the big houses. They like to be mobile and travel and that sort of thing. So they keep their holiday decorations and their kayaks and their bikes and things in their self-storage unit. And so that's just a trend that's going to continue to grow as those millennials continue to mature. But it's definitely an increasing asset class. In our investor presentation, we have a chart that goes back to the 80s, and the chart shows the GDP of the U.S. going up and down and up and down, like a wicked roller coaster. And then overlaid on top of that, we have self-storage occupancy, and it's just been steady between 80 and 90% over that entire 40 plus year period. So it's a very steady asset class, and it's a growing asset class.
Great. Thanks, Tom. So what inning do you think we are in for self-storage asset class? It seems to have become part of the mainstream investing convo in the last couple of years.
What inning are we in? I mean, I think we're still in batting practice, or maybe the first inning, because it is such a resilient asset class, but it's still not widely used. So that 10% number is just going to keep increasing over time. I wouldn't be surprised if, in the next, 5, 10, 15 years, if it didn't get up to 15 or 20%. Because what you're seeing, Ryan, out in the self-storage world is, the first generation of self-storage facilities were kind of tucked back in these dusty, rusty old industrial complexes. But what you're seeing today is on major thoroughfares, you're seeing brand new self-storage facilities put up, and you're seeing old Sears or Kmart or Best Buy, big box stores that have gone out of business. They're being converted into self-storage, and they're going to be right there with the grocery stores and right near the schools. And let's face it, it's again another fact. Not saying anything sexist, but women make the buying decisions in households, and so women do not want to go back in the rusty, dusty, old industrial facility. They want to go to the convenient, well-lit, shiny storage facility. So it's going to be more and more ingrained into the American family.
Awesome. Another quick question for you. What is the origin of your name, Belrose?
Great question. Well, anyone who's known Joe and I for a while know that we like to go out and have some fun, and we like to have fun with our business names. So our first company was Oakmont Note Group, and that's when we started out in the distressed mortgage debt business. And it was called the Oakmont Note Group because we started it on the back of a paper placemat at the Oakmont Pub in Havertown. And since we, grew our business and, kind of upscaled ourselves, Joe now lives in Bryn Mawr, I live in Wayne, and we hang out sometimes at 333 Belrose Bar and Grill. So we took the Belrose name from there to attach it here to our storage business.
Awesome. Well, appreciate the information. And again, you guys can visit belrosestorategroup.com. You'll be able to get this live. You'll also be able to get it on camaplan.com under Cama Academy. You'll see media library there. You'll be able to get these, and you can email Tom if you'd like these slides. And thanks for being with us, Tom. Appreciate the information, and thanks for everyone who joined us today.
Yeah, thanks everybody. Thank you, Ryan.
You're welcome. Take care.